Joined now by John Augustine. He's the Chief Investment Officer at Huntington Private Bank, and Tracy McMillan is Head of Global Asset Allocation Strategy at Wells Fargo Investment Institute. John, I'll just start with you. You want to just kick off what Rick just said there? I mean, do you think people would be insane to short this market?
Rick did a pretty good job of summing up the markets, Kelly. Just saying. So in general, though, in summary, yeah. Look, bonds are not offering us enough yield to cover inflation. They're not offering us enough yield right now to produce income for our customers. We are having to go to the stock market for that. We see the stock market offering plenty of dividends, plenty of earnings next year. So yes, we would agree it's tough to short stocks in this environment. You still got to be incremental around stocks, but it's tough to short stocks here.
All right, so Tracy, I'll ask you, if for people who are saying, well, I'm a little nervous about some of the weakness in big cap tech and that sort of thing. I mean, do you think the market kind of coalesces and can move through this period where we might see adjustments in some of the high flying names? Or do you have to kind of take the chips off the table and wait and see what happens over the next couple of weeks here?
So we do think the market can move through here. In fact, the broadening and the recent rotation is probably a positive sign. In fact, you want different leadership because that's what drives a bull market forward. So we're still favorable information technology. We also like consumer discretionary, communication services, and we've recently upgraded materials and industrials.
Okay. John, what about you? We haven't talked tactically. I mean, are you saying to people just stick with the market, in a very broad way, or do they need to be careful or more strategic about what sectors to have exposure to?
So we are broadening out. We've done that twice this year. We've rebalanced twice. We've broadened out twice this year. Small caps, we would say, are the next point of confirmation. As Marcy talked about, with the broadening stock market, they're about 5% from their all-time high, which was in 2018. In the sector space, what our equity team told us this morning is they are very benchmark aware. So they're staying pretty close to their sector weightings. They're looking to see the earnings growth next year. Next year, in our view, our equity team is going to be about earnings growing into stock prices. So January will be an interesting month for stocks.
But you're sticking with names like Apple and Microsoft for some of your top equity strategies? Okay. All right, Tracy, then I'll give you the last. Yeah, I'll give you, Tracy, the last word here. Where do you think people should be positioned? I mean, is it kind of broadly in the reopening sectors? Does it need to be in some of these more specific names? And should they look for buying opportunities if tech and other stay-at-home names correct?
Yes, so we would say look for buying opportunities, but it's really interesting. November was such a strong month, and we looked back at other very strong months in history. In fact, it's the 10th strongest since World War II. And when we look at those other periods, what we see 6 months out and 12 months out is average return of 13% and 15% respectively. So it's very possible that we could see additional positive returns from here, especially if we get a strong holiday season and if we get a stimulus package like the market's looking forward to.
All right. John and Tracy, thank you both for your thoughts on the market today. We really appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.